Wow, look at this market, 5 down days in a row. Some volatility finally. I know we're all so used to constant up days one after another. But yeah, these are supposed to be real markets, when they're not fully manipulated, so they do go down sometimes. And that's what we're going to talk about in this video, whether this is a longer term correction / crash, or is this just a normal retrace and the bull market is still in place. It's our standard market review, which you know and love, maybe. And also at the end of this video, we have an interview with a really successful but unknown quant trader. Super smart guy, is worth almost 500 million. It's crazy. But I was able to ask him a few questions and I recorded his answers and I put that at the end of the video. So make sure you don't miss that. Now let's start our review with a quote like we usually do. And this one is from Adam Smith in his book, The Money Game. He said, "Unfortunately, as we have seen, playing the game is not entirely a rational affair. If it were, the most impeccable fact finding would soon dominate the market. And many of the players would be bored to death and would invent some other game." And the money game that he's talking about is the stock market. And this is really important right here. It is not rational at all. Because at the end of the day, when you look at the stock market, what is it made up of? It's made up of people, and people are not rational. They're just completely emotional people. So you always got to keep that in mind when you're investing, because it's easy to get locked into fundamentals or technicals, thinking, oh, if I could project out this cash flow, then I know this stock should be worth this much, and that's how it should work. Or if I got these two lines making a triangle, it should break out this way. That's how it's supposed to work. But at the end of the day, no, none of it actually matters. It just matters what everyone else is buying and selling, and they do that based off emotions. So when we primarily talk about investing on this channel and in our research firm Macro Ops, we talk about something called playing the player, which is exactly what it sounds like. You're trying to figure out what everyone else is doing and then make your decisions based off that. It's kind of like they say in poker, are you playing the cards or are you playing the guy across the table? Because if you think about it, when you find a stock, the only way that stock price is going to go up is if other people are buying it, right? Doesn't matter if it's undervalued, and if according to your analysis it should go up, the only realistic way it'll actually go up is other buyers. So you always want to be one step ahead of them. This doesn't operate in a vacuum. At the end of the day, it's like an economy. It's all buying and selling. It's a market. So the way we play the player with our strategy is through momentum. And I've showed you guys this table before. This TSI number right here ranks all the stocks with the highest momentum in the market. And we rotate into the top 5 highest momentum stocks each month. And that's how we're up over 62% this year. It's doing pretty well. Because if you think about it, what is momentum? It's how a stock price is moving based off all the buying that's occurring. So we're not looking at anything other than what everyone is buying, and then we're jumping in on that and riding that trend. That's how we play the player. And if you break it down, it is a very simple concept, and it is simple to execute once you're doing it the right way. So getting it done the right way, well, that's a little more difficult. But we figured it all out and made it really simple, and you could learn how to do it yourself in this free training right here. There's a link in this video and down below in the description and comments. We'll teach you exactly how our strategy works, how we play the player, and how to use this chart right here, this graph, the TSI. So definitely check that out if you haven't already. Same strategy I use and all of our Fallible members use as well. Moving on, let's look at some stats of what's going on in this market. Right here is an interesting graph that shows the business applications by state in the US. And you can see here they're up almost 40% this year. So lots of businesses opening up. Is that a good thing? Yes, I think so. But it might also be a signal that there's a lot of easy money, too much easy money. Next, we could look at the options market, and this graph right here shows the amount of people that are bullish on single stock calls versus index calls. So a lot of the options traders are betting on single stocks flying higher, because if you buy a call, you're expecting prices to go higher. But at the same time, they're buying more puts on the entire index. So such as like the S&P or the NASDAQ. And if you're buying a put, you're expecting things to go lower. So there's a big divergence there. Another interesting chart is gold versus the NASDAQ. And we've been talking about gold in these past few videos because it's been on a crazy run. But that run doesn't hold a candle to how the NASDAQ has been performing. You can see right here when you're comparing gold to the NASDAQ, gold is just falling. You could even do a little technical analysis right here and see if that will continue. Will gold continue to underperform as the NASDAQ shoots higher? Maybe it'll even accelerate. Housing also looks to be a very bullish sector. There's a big demographic wave of first-time home buyers crashing into record low mortgage rates and high housing affordability. So you can see the largest population right here is in that home buying age, between 24 and 39. And actually home ownership rises sharply once people cross 40. And millennials are getting to that stage. They're between 25 and 40 right now. So you see see it flips. So we could be getting another housing boom here soon. Another stat we could look at is global industrial production. And relative to its historical trend right here, it's just recovered to the lows before the great financial crisis. Well, it's recovered just above those lows, which you can see we're right here. And now we're back to this level. And this is a symptom of the long-term debt cycle that we always talk about with Dalio. We've spent decades artificially boosting capacity, and that capacity is now meeting our declining ability to take on new debt. So now there's a lot of excess capacity. And if there's excess capacity, what happens to prices of goods? Because there's too many goods and not enough buyers, prices go down, which is what we would call deflation. But policymakers hate deflation, right? So they're gonna print until we balance it out. And as we say here, have no doubt that the policymakers will eventually win. So we'll still get that inflation. But this kind of stat is definitely dampening it. Another thing we were looking at was the CCP boosting their economy into 2021 for the centennial anniversary of the Chinese Communist Party. Oh, what a celebration. Well, the whole CCPV threw a wrench into that, but it's looking like their credit markets are looking to transition to late expansion next year. So they're getting back to their plan. And it's always important to track China because they are one of the biggest providers of liquidity in the global markets. And what do we know about liquidity? That's what forces prices up. Lots of money in the system, it has to go somewhere, right? So it goes into assets, pushing all the prices higher. And no one pumps out money like the CCP with all their ghost cities and all their spending that doesn't actually do anything, but keeps building their house of cards. And the effect of that gets spread across the world. So it's always key to track their spending. Another market we're looking at is Bitcoin. It is trading in an extremely tight compression here. And its monthly Bollinger Band down here is in an all-time low, or the width of the Bollinger Bands, I should say. So normally in markets, when you get tight compression like this, what comes out of it is a huge expansion, meaning price launches higher or lower, either direction. That's how markets work. Compression, expansion, compression again. So Bitcoin is definitely a market to be watching right now. And what we were talking about before, how policymakers will win out by printing and causing that inflation, well, that's going to cause Bitcoin to go much, much higher because people do treat it as a hedge against all these fiat currencies and inflation, kind of like gold. Another good place to look in the market, where Warren Buffett is also looking, is in Japan. Outstanding shares in the Japan ETF EWJ have fallen to 7-year lows. And that means investors are not interested in the country, but the market isn't far from making all-time highs. So that's how you can get in on a bunch of companies really cheap. Snapchat is another company that's actually looking really good. It's building a solid long-term head and shoulders pattern here, inverse head and shoulders. Plus, the company is doing some interesting things around augmented reality and could be a leader in that space in the coming years. So definitely another stock to check out. Now, if we look at the markets, what we're probably going to see, especially going into the election, is sideways chop. And that's what we're getting right now. We put a high in, fell, came back to a lower high, and now we're falling again. So what we could see is this type of compression. And this is what we were talking about before, right? Compression and expansion. So the market may trade within this range for a while. And then when it coils tight enough and digests these gains enough, it should either launch higher or lower. And in our opinion, because we're still bullish, it should launch higher, especially because regardless of who wins the election, more stimulus is coming, more liquidity. And as we talked about, that's what's required for stock prices to go higher. But before that, we are going to get this sideways chop. So no crash, but no upward movement at the moment either. And looking at the long-term chart again, if we look at the monthly candles, we see that in September, prices really pulled back, right? There was a lot of buyers that came in and propped things up. So because of that action, we were still bullish for the October month, which looks okay so far. So that action in September, when we could have had a really bad month, or even worse than we did have, that made us more long-term bullish. If we look at sentiment and positioning in the market outside of retail buyers buying tons of call options, positioning and sentiment are still neutral, which is good because if they're too bullish, then look out below for the markets because it's kind of like inverse. If people were really bearish, then it'd be a super bullish sign. Prices would go up. But neutral is just okay. And also, like we talked about before, the large asset managers remain underweight in risk assets. They haven't put their money into stocks yet. So there's a lot of cash on the sideline ready to buy any dips. Breadth also remains strong in the market. It's a tailwind for the S&P in the near term. And macro conditions are flush. So there is a lot of liquidity. That's another reason we are very bullish long term. So we are still bullish and we don't think a crash is coming, but in this type of volatility, you need to be careful how you're trading. You need to be managing your positions properly because you can get shaken out really easily. And if this does turn into a bigger dip because no one knows, you can get blown out. But how to manage those positions is exactly what we talk about in this training. So again, if you haven't taken it yet, make sure you click the link in this video or down below in the description and comments and check it out. Really, really important, especially in the markets that we're in. And now, like I said, we have that interview with a quant trader. Really smart guy. I think you'll like what he has to say. And remember, if you like these videos, make sure you subscribe to this channel so we can see you in the next one. Stay fallible out there. Here's the video. My name is Billy Mahogany, and I'm a quant trader. Question here says, why are you a quant trader? Well, I'm a quant trader primarily because numbers don't lie. Men lie. Women lie. But numbers don't lie. 4 plus 4, that's always going to equal 8. But tell me why my ex-wife lied about sleeping with the senator. Now, she didn't call that a lie. She called it an omission of a fact, which sounds like a lie to me. But a number would never do that to you. Take the number 2. The number 2 is trustworthy. You can trust the number 2. You always know where the number 2 is at all times of night, right between the numbers 1 and 3, where it should be. Numbers aren't like, say, politicians, specifically senators. Now, in my life, I've never met a politician with less than 3 STDs. Now, 1 STD, I can understand. You can't expect to go to the gym and not get a callus. But 3 STDs, well, to get the third, you had to have been lying about the first 2. That's why I don't believe in these politicians' promises to do this or do that or drain the swamp. Draining the swamp is actually the name of the procedure that they have to get done at the doctor's office once a week. Get rid of all those STDs. Same procedure my wife gets now. Well, my ex-wife. Well, my current girlfriend. We're dating again. The senator is involved. It's something called open relationship, because my girlfriend is a very open person, I guess. She said to me, Billy, you're a quant. You do the math. Why would I want 1 when I could have 2? I said, well, I think the senator probably has 3. But she wasn't talking about STDs now, was she? But what was the question again?